When people talk about the future of money, one name always comes up: Bitcoin. But is it really currency of future or just a digital fad that refuses to disappear? To answer that, let's start from the beginning. What Bitcoin actually is, how it works, why its price seems to rise in cycles, and what that tells us about where money might be heading. Bitcoin is a digital currency created in 2009 by an anonymous figure known as Satoshi Nakamoto. The idea behind it was revolutionary: money that exists purely online, controlled by no government, no bank, and no company. Instead, Bitcoin runs completely on code. It's powered by people around the world using a shared network of computers that all agree on one thing: who owns what. At the center of it all is something called the blockchain. Think of the blockchain as a giant public record book or a ledger that keeps track of every Bitcoin transaction ever made. Every few minutes, the network adds a new page to that record. Once something is written in it, it can be changed. There is no central server, no banker, and no middleman. Thousands of computers around the world verify and store copies of the exact same data, making it transparent and nearly impossible to fake or hack. Now, how does new Bitcoin get created? This is where mining comes in. Instead of printing money, Bitcoin relies on the computer solving complex mathematical puzzles. When a miner's computer solves one of these puzzles, it confirms a batch of transactions and adds them to the blockchain. As a reward, that miner earns new Bitcoin. But the amount of Bitcoin that miners earn doesn't stay the same. Roughly every 4 years, the reward gets cut in half, an event known as the halving. This is built into Bitcoin's design to make sure there is strict limit on supply. There will never be more than 21 million Bitcoin in existence. These halving events are key to what people call Bitcoin's market cycles. Each time the supply of new Bitcoin slows down, scarcity increases. If demand stays strong or grows, the price tends to rise. Historically, this pattern has repeated every 4 years, a major price rally following each halving, often followed by a correction and then years of gradual growth before the next cycle begins. This rhythm is one of the reasons Bitcoin is often called digital gold. Like gold, it is scarce, mined by effort, and viewed as a hedge against inflation and uncertainty. In 2025, the effects of that latest cycle are everywhere. Bitcoin is trading above $110,000 with explosive demand from both institutional investors and everyday people. For the first time, traditional investment tools like Bitcoin ETFs have made the asset accessible to regular brokerage accounts. No complex wallets or exchanges required. More than $29 billion have poured into these funds in this year alone, making Bitcoin one of the most discussed assets in global finance. But here's the big question: can you actually use Bitcoin as normal everyday money? Technically, yes. In El Salvador, Bitcoin became official currency back in 2021. The country even mines coins using geothermal energy from volcanoes, turning natural heat into financial power. In practice though, most people don't spend Bitcoin on daily purchases. They hold it as a store of value, similar to how investors hold gold or stocks. It's less about buying coffee and more about protecting against inflation or diversifying wealth. Of course, the story isn't all perfect. Bitcoin's volatility is extreme. Prices can rise or fall 20% in a matter of days. Its energy uses is massive, with critics pointing to environmental costs of mining. And while it's designed to be decentralized, changes in government regulations or taxation can still influence how people buy and use it. Economists too are deeply divided. Some see Bitcoin as the foundation of a new financial era, one where money is independent, transparent, and borderless. Others, including Nobel Prize winning voices like Eugene Fama, warn that Bitcoin could eventually collapse because it lacks intrinsic value. It isn't backed by cash, gold, or real world assets, only the collective belief of its users. So, where does that leave us? Is Bitcoin really the currency of the future? The truth may be more nuanced. Bitcoin might never replace our daily money, but it has already changed what money means. It proved that a currency can exist entirely online without a central authority, and that trust can be built through code instead of institutions. Its very existence paved the way for the broader world of cryptocurrencies, stablecoins, and central bank digital currencies that continue to reshape finance today. For younger generation especially, this is the turning point. Whether you invest in Bitcoin or not, understanding it matters because Bitcoin isn't just another asset. It's a global experiment showing us what's possible when technology and trust combine. Bitcoin might not be currency of the future, but it has already defined how the future of currency will be built.
Hey, just a quick reminder, I've created a PDF library with simple structured summaries to help you review the key points. You'll find the link to access it right below in the description.